Hey guys, welcome back to another video from the Maestro Speaks. Hope everybody's doing great. This is the beginning of the next week, the new week, the trading. All right, now we are back with this GBPNZD um, analysis where we currently are in the market. And as expected, the sellers are now in control of the market. And I say this in every single video, and I know I sound like a Scotch record, right? There's nothing better, and I don't care what nobody say, there's nothing better than viewing the market from the higher time frame perspective, because the higher time frames give you or gives you an overall view of market direction. Of course, the sentiment of traders who trade the market, they are the ones pushing the market. You know, we're talking about the big banks and human beings being the ones trading the market are creatures of habit. And these habits lead to levels in the market being created. And we're talking about historical levels being created. That's what trading is, you know. What trading is, in essence, is the market moving from support to resistance and from resistance back to support. That's all it is, essentially. Now, that being said, remember I told you about this indecision doji candle here? I told you about that in my last video. Not last video, but previous video prior to the last one. And I was telling y'all that a sell was imminent because the buyers were losing confidence in the move. Now, overall, this market is going up, you know, long term. This particular sell off is what you would call a retracement, but being on the higher time frame, the weekly, it is a lengthy retracement. So don't get it twisted. Based off of the structure of this market, the GBPNZD, long term, this market is going up based on the technicals that I see. But this area here is signs of retracement. Structurally speaking, now, seeing that the market has already made its move, and if you haven't gotten in to this sell, I would suggest you don't get in. All right, or if you scalp and you scalp, do what you got to do. But um, the long term traders, you would have missed the move, but that's okay because the bus always comes back around. All right, now you have this area in the market that the sellers have to contend with. We have a past resistance, future support scenario. All right. Now, based off of what happened on Friday, with the closure of the candle being bearish and engulfing the previous day candle, it is the sentiment of many sellers, the sellers of this particular market, that the market could potentially drop down to the same area right now. This is the 2.0065 level, the area itself, right? Because if you look at it, you can see that this area has held as resistance for quite some time, multiple times. So structurally speaking, it is only logical for if you're selling this market and if you want to practice safety, that the market will drop to the same area right here. All right. Now, mind you, it could push up from here, but I highly doubt it because structurally speaking, and if you look at the historical moves of what the market did when it got to this area, it pushed past this area because this was weak support. Historically, it was weak support. But then you have a stronger key level of support, which was resistance, that you have to concern yourself about. And many traders, they see this area as buying opportunity right here. So you're going to have a lot of persons trying to go long in the same area here. And if the market breaks past this area of support, you're going to fall to the next level of support, which is the 1.9810 level. All right. So keep your eye open. You have two levels of support that you have to concern yourself about in this market, which is, of course, a market that is going up long term. Now, what I'm going to do, I'm going to simply take on my Fibonacci retracement. I'm going to go from the last swing, we're talking about the last swing low, to the swing high, all right? Now watch this. I want you all to see something about market structure here. I will now look, and this now the 50 and the 61.8 level and the 38.2, they are interesting areas in the market, right? The interesting areas in the market. Now, I will insert my rectangle in the golden area. This is golden. That's golden. All right? It's just the golden zone here. And of course, you have the 30. So anywhere between this area, and of course, you have, if the market decides to break all those areas, once it doesn't break past this area, because if it breaks past this area and continues to fall, then you'll say, hey man, this market is definitely dropping and it's going to actually sell off. But see, this is the last area of structure here. But then within the area of structure, there are minor structures also. And if this market falls, and passes this golden area, then more than likely the sellers may be dominating and actually take the market all the way even beyond this point. But like I say, I highly doubt it because we're talking about long term now. This is a long term buy. All right. So safety, I would say this is take profit one. This is take profit one. And if you're a little daredevilish, take profit two. But I say take profit one is safe. Right here. If the market is going to continue, I say the market will fall right here, bounce off of this area of support, and then it's going to go higher, and it's going to actually contend with this area up here, which is the 2.1054 level. Because I see the buyers dominating this long term. All right. So that's it. You guys have a wonderful trading week. Trade responsibly. Don't over leverage your account. And subscribe to the channel. Peace. God bless.